Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Thursday, August 11th, and we saw the markets kind of cool off today. They were hot again in the mornings and then kind of sold throughout the day, and we ended kind of flat. But I found this article today, and it kind of relates to the broader themes going on, and it says that Powell needs to speak up to stop ill-fated market rally, strategist says. So, this is from Bloomberg. Principal Global Investors Seema Shah is no stock market bull, but says that the rally that erupted Wednesday may continue until the head of the Federal Reserve steps up and stops it. So that is true. Really what the Fed does is going to determine where the markets go from here. But we're approaching that level that I talked about this weekend, to where 100% of the time when rallies recover 50% of their gains and close above that level, then that has indicated that the bottom is in 100% of the time. It's happened in every single bear market in history, and we are like less than 1% away from that level. So I think if they are wanting to continue this bear market or continue this tightening environment and keep the markets at fair value, then they're gonna have to do something fast. Another quote says, "The market is underestimating the risks out there," the firm's chief strategist said in a Bloomberg television interview on Thursday. "They need a catalyst to remind them, and that has to come from Jerome Powell." And I can't say that I disagree. I think that Jerome Powell can't just intentionally bring the markets lower. I don't think that's his job. I don't think that's how a free market should work. But I do think that people are getting a little bit too optimistic about the Fed outlook, and that they're too optimistic on a pivot, and they're too optimistic about inflation. Even though inflation may have peaked, and we've only seen one print lower than the previous month, I think we're way too ahead of ourselves. Like 8.5% inflation is still horrendous. Like if we finish the year over 6%, which would imply 0% growth in the inflation rate from now until the end of the year, we'd still be over triple the Fed target. So I don't really see any sort of catalyst for the Fed to pivot on just yet. So there's a stat that stocks typically bottom 6 months before the last Fed hike, but even so, I hope that they learn from the mistakes in the 70s and 80s when they pivoted too early and inflation persisted onwards again. I really hope that they learn, and that, because that would just cause a prolonged issue instead of just getting it under control now. She also said that inflation is still a problem. You need to see growth slowing. So I think a lot of these institutions are seeing what I'm seeing and are kind of not really panicking, but concerned about what's happening in the markets right now. If we see valuations go up much higher, we're already like stretching fair value. Like we looked at that over the weekend as well, and we're up higher from where we were on the weekend, much higher. And already we were seeing market valuations just drifting away from fair value and from their typical averages. Even at the bottom in June, we were approaching the average fair value for equities. So I don't think we're in any sort of environment that would imply that we should be at a premium. But the market can stay irrational longer than you can stay solvent. So that's just where we're at right now. That's our reality. The markets are maybe a little bit too high, but I think it shouldn't be the Fed's job to worry about the stock market. I think it should just be the Fed's job to worry about inflation and do whatever they need to do. Clearly, the market is not too concerned about what's happening right now. There hasn't been a horrific crash, even when we were down like barely over 20% on the S&P and like 30% on the NASDAQ. That's not a horrible crash. That's a bear market, but it's nothing to panic about. So I don't think the Fed should have any reason to really slow down their rate hikes. I think they're going to continue to be as hawkish as possible, and we may even see another 0.75% rate hike. So this was the S&P 500. So we broke above this level right here where my cursor is at, where that line is, that huge level of resistance. We gapped up above it, and we kind of came back to a little bit below yesterday's close, down just under 0.1%. So the market could come back down to this level, about 41.58, 41.60. And I mean, now that's going to be a support level. So it was a huge resistance level. It's been a support level in the past, and it will act as support again. So it will take it will take a lot of selling for us to get through there. But let's take a look what the S&P 500 did today. So we gapped up higher again, we're buying in the morning, and then kind of sold off the rest of the day. So we really kind of cooled off today. Let's take a look at Bitcoin. Bitcoin actually is pretty sure it's right about where it was yesterday when we recorded, just shy of 24,000. Bitcoin, for a brief moment there in the morning when the markets were going higher, also was higher. Got as high as 24.8. So we haven't cracked above that 25,000 yet, but I mean, we're still on the path, in my opinion. Oh, sorry about that. We're still on the path, in my opinion, to this 28,000 to 30,000 level. I think unless we see something drastic in the markets, that it should be headed towards this level in the short to medium term. What happens after that, I think, depends on the broader market and the landscape, but I don't think a lot of the things that have been moving Bitcoin are relevant to the value of Bitcoin anyways. We talked about that in the weekly wrap, but that's all I have for you today. Be sure to listen tomorrow. If you're watching on YouTube, be sure to subscribe and check out the podcast. If you're listening to it on a podcast platform, be sure to follow us and check us out on YouTube and subscribe there. Apologize for my voice. But yeah, that's all I have for you today. Be sure to tune into the next one, and thank you for watching.